Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hello everybody, this is Coach D with TackleTrading.com. I'm here to give you a quick market update. And in anticipation of the FOMC meeting that we've got coming up here on the 16th. So looking at the market, where it traded up to today, this is a chart of the E-mini S&P futures. And what we're really looking at is right here, this candlestick right here, is where the market closed. That there's aftermarket activity. And you know, from what I'm seeing across the board, one, we've had a lot of volume lately, higher than average, if you were to kind of ballpark that out. And we have a violation of the first support zone. And we see that it is the stock price here, the futures price is trading down below all of the moving averages. It's trading down below the 20 period moving average, the 50 period moving average, and the 200 period moving average. And so, you know, those can be signs of overall price action tipping, and it's just a general indication that we are a little weaker than average. Now, the S&P actually did in fact come in and establish a slightly lower low. It pressed down. It didn't close down there, but it pressed it. And so it's rebounded. And again, on typical, pretty good volume here. But it's in a kiss goodbye zone right there. And so if you really want to see this, here we got the M for murder, and you'd get a kiss goodbye zone if it broke down here and rallied up. But if you look in closely here, there's a double top here. It breaks support. It's in its own little kiss goodbye zone there. So if you really want to see that in detail, one of the things that'll help you with identifying your technicals and understanding what's going on is to take a look under the hood, so to speak, and drop down into smaller time frames. So we can go down into your, let's go down into intraday, and to really see that in a little bit greater detail, let's go grab the last 30 days and hit a 1 hour chart. And here you can see the key support zone. So we can say, okay, here's the support zone in question that broke, and there's the lower high. It's not a textbook double top like M for murder, but it's got the same pressure on support. So I mean, yes, it is an M or an inverted cup and handle if you want to look at it that way. But it's that break of support, rally up. Here's an inverted head and shoulders. So that's just technically where it's sitting, and really at the end of the day, all the technicals kind of go out the window with the FOMC meeting coming up. So we have the FOMC, Federal Open Market Committee meeting tomorrow, where they are going to make an interest rate policy statement. And just real quick, look, if you go to the CME group, you can actually go look at the interest rate watch, and they have statistics for us telling us what they believe the probability of outcome is here. So let me zoom in on that, see if we can really spot that. So for tomorrow's announcement, which again is at 2 p.m. Eastern, the statistics that they're showing, the implied probability of it going to 0.50, increasing from where it's at, is 81.4% according to them. And then, here they're saying that there's an 18.6% chance it goes to 0.25. That's just again statistics, and it'll be interesting to see what the Feds do. But we spend a lot of time talking about this in the Coaches Show today, and the general idea of the interest rate being raised, I believe, has already been priced into the market. And it's really not so much about whether or not they raise the rates. It's going to have, the market's reaction is going to have a lot more to do with the tone of the meeting minutes, with the statements that they make, whether they're dovish or hawkish, is really, I think, how the market's going to interpret that. So what do we expect going into the market tomorrow is, as we head into the open, you may see a little bit of overnight drift, and you might see, let me drop that back out into a daily time frame. what you'll typically see is very low movement, very low implied volatility, and typically what'll happen here is you'll just see a small body candle, and really not much different than what we're looking at right now. That little small body candle right there is the post-market futures activity, and it might get a little bit bigger, but you're probably looking at some candlesticks that look something like that for the most of the day. And what we would anticipate, what we really would expect to see is, in anticipation of the announcement, people understand that creates a lot of volatility. Traders know this going in. And so this might be a repeat for you, but if you're new to the tackle trading, you're new to trading and investing, it can be very, very helpful to understand how it is that these things influence and affect the market. It's probably right now monetary policy is the single largest influencing catalyst for change in the market. If we were to drop that down into, say, 15-minute time frame, kind of zoom in here, and let me go increase the margin out there, change the right expansion a little bit. Double that out. Okay, so if you were to kind of look at the way the market activity typically plays out, is you'll see this every day where you have really high volume and some volatility in the morning. During the middle of the day it gets quiet, volume tapers, and then high volume and volatility at the close usually. Again, high volume movement stagnates. Here you didn't get much, got a lot of volume but not much volatility. So now what happens is when the market opens, the volume will spike. You'll get a nice big spike in volume. You might get a little bit of volatility. I don't expect a lot. Definitely less than you've seen the last 2 days. And then you'll see it just kind of quiet down, and the volume is going to get really low in anticipation of the Fed. And people will be kind of getting in, getting out, jockeying for positions, making sure they're covered, they're hedged. It can affect not just the market itself, but that can directly affect everything else out there. It's also going to affect the currency, so you have to have a really good understanding of what's going on with the currency. But expect it to kind of ping pong back and forth until, let's say that's the 2 o'clock hour down, when the scheduled event is going to occur. And if you were to kind of look at that, when it gets there and they actually release the announcement, it's going to react whichever way it reacts. Now, the outcome is up or down, really. If there's really no surprise, you might see a little whipsaw and then it resume. But I would expect for it to pick up or pick down, and we don't have to predict the outcome to profit. In fact, trying to predict the outcome is a good way to lose money. A better way to approach it is to simply know how to identify the catalyst that, hey, that's going to move the market, identifying the trigger points like known resistance or known support as it established those for the day, and then if it breaks resistance, be a buyer. If it breaks support, be a short seller. And just to understand that it can move the market, and watch, and I encourage everybody to actually watch that play out in real time if you can. And then if you can read the meeting minutes and actually see verbatim, they usually put out a little statement that's somewhere around 1,000 words or so, and may or may not be a big statement, but you got to be very, very close attention to the verbiage. So that's what we'd be expecting to see from the market heading into the open. Probably the only other thing I'd really be paying close attention to would be, of course, all the other major market indices. The volatility index will probably pop at 2 o'clock. And then the dollar index. I expect the dollar will be directly affected by the interest rate policy statement. And if they do raise the interest rates, that would typically be perceived as strong for the dollar. So let me drop that back out to a daily time frame. And what I see here on the U.S. dollar is that one, it's already retested the existing highs, and two, that it went through a really strong little Elliott wave run up, hit the resistance, did a 2-wave drop, and it's into the support zone. and it's trading above the 200 period moving average. You can see that 200 period moving average right here. That could be a potential support zone. You've got significant support zone here, and if you actually to go and measure out your Fibonacci's from here to here, that being the wave and into the retracement, you're looking at about a 50 to 61.8% retracement. I think that's about 61.8%. Let's see how good the eyeballs are. It might be 50%. Let me pop out of the drawing mode. 50%. There we go. 50%. So you notice it hit 38.2, bounce, hit 23.6, drop, 50%. Big engulfing candle, but low volume here, and it's in a potential zone. The 61.8% is a little lower down there, so that would be an area price point to watch. But again, with the FOMC meeting coming out, I'd expect to see very low movement on this until the FOMC policy statement at 2, and then it'll pick a direction. It'll either run up and or down. Now, if they raise interest rates, I think the dollar runs hard, because that'll strengthen the dollar against the other currencies if it pays a little bit more interest. So this is Coach D with TackleTrading.com. Hopefully you found this informative and educational. Most importantly, as we head into the FOMC, Federal Open Market Committee meeting, make sure that you have your stop losses adjusted, lock in gains, profits, maybe take adjustments on positions to reduce your risk. And if you don't know how the market really behaves, it might be a good time to exit. But again, just always use your best discretion. And if you are able to stay on top of the trades, it's a very exciting opportunity to make money. You can actually sit and trade the currencies, you can trade the futures, and individual stocks will respond differently. But most of them will go with the flow of the market.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.